Hello, and thanks to everyone on the line for joining us today for the Investor Roundtable series. This is hosted by the GSMA Mobile for Development Utilities program. My name is Wade Owajori, and I have the privilege of moderating today's webinar, which is scheduled to last for about an hour, and I'm joined and supported by my colleague Charu Chadha, who will be collecting the questions from the audience. Today is the final installment of a three-part series, and our focus today will be on funding platforms. We have two great speakers. We are joined by Carlos Pierre from Kiva, and we also have Koen Thé from Lendahand, and it's great to have you both with us today. We're going to come back and have a proper introduction of both of our speakers in a short while. Before that, I'll give you an introduction into the GSMA M4D Utilities program, and then after that we'll hear from each of our speakers, and they will each in turn speak to us about some of the insights from their investment approach, and we'll get their advice for entrepreneurs on best practice and what things to avoid. There will be time for Q&A. We'll take that at the end, and you can submit your questions at any stage via the chat box. At the end of the series, we'll be publishing a summary, and I'll speak to you about that at the end. And this webinar will be recorded and made available on our website. So a brief introduction about us, and for those who have joined parts 1 and 2, this will be very familiar to you, but for those who are joining us for the first time, we just want to let you know that the M4D Utilities program is a program that sits within the Mobile for Development group at the GSMA. The focus of our program is on energy, water and sanitation services that leverage mobile to reach underserved communities in emerging markets, as illustrated by our mission statement. We are supported by the UK government, and this support has contributed to the impact numbers that you see illustrated there in the infographic. We've achieved this for various activities. Case studies from completed pilots are an output from our commitment to knowledge sharing. We also convene the industry through workshops to share these learnings and help promote cross experience sharing as well. The feasibility studies that you see numbered there at the bottom are examples of our advisory services that we provide to mobile operators to help identify market opportunities in the region. We have a number of grants that we've awarded, and that's a result of our innovation fund. And this investor webinar series is an example of our efforts to help facilitate market building and encourage further investment. We've seen that there is a need for us to help give entrepreneurs guidance on developing a better understanding of the types of investments, types of investors, and how best to engage with investors when raising funds. So while we've seen more uptake in pay-as-you-go solar home systems and in the energy space, there's still a lot more work that can be done, particularly also for water and sanitation. And in part 1 and 2 of our series, we looked at foundations, and we also looked at investment funds respectively. And the blogs and the recordings are available on our website for you to kind of catch up on those insights. But coming back to funding platforms, to kind of kick off our discussion, I'd like to bring in our first speaker, Carlos Pierre, and hand over the floor to Carlos to kick off our discussion today. Hi, Carlos. Carlos, I know it's quite early for you this morning.
Good morning, everybody. I was speaking to a muted mic. Apologies for that.
Morning.
I will not introduce myself. You can read my bio on the slide itself. I used to work in investment banking, and I joined Kiva almost 5 years ago. And it's been very interesting to help move the platform from its traditional microfinance roots to other areas where crowdfunding can be relevant. If you look at the next slide, you can see that Kiva's mission is connecting people through lending to alleviate poverty. I'm not sure how familiar everybody is with the Kiva platform, but it is obviously a crowdfunding website specifically focused on loans. And this presentation today is focused on a pilot project within Kiva called Direct to Social Enterprises. And unlike the main platform, which is the one that's fundraising about $3 million every week, we'll end about $150 million every year. And we just recently crossed $950 million in total lending. We should be hitting $1 billion in total lending sometime in Q1 next year. That is the bigger platform that usually works through field partner intermediaries. This presentation is focused on direct to social enterprises, which allows companies that are too small for traditional banks, but too big for microfinance institutions to access finance. Now, in terms of geography, we work in about 25 countries. Kiva, the classic portion of Kiva works in more than 80, but we have restricted this program to countries where the regulatory framework is much more transparent in terms to lending and making investments in foreign countries. So, for example, India and China and Russia are completely off the map despite the great impact that could be achieved by intervening there. In terms of sectors, we listed a few, but the main driver is social impact. And that is a very nebulous concept, and therefore it's really important that you just clarify how your company is bringing about impact to the lives of the bottom of the pyramid. And as long as it's doing that either by creating employment, education, clean energy, whatever it might be, then as long as you're clearly measuring that impact, it's worth applying to Kiva to access cheap capital. If we go on to the next slide, what type of companies are ideal to working with Kiva in terms of stage? The primary requirement is that you have sales revenue. If you are profitable, it's preferred, but it's not mandatory. And in fact, if you're extremely profitable, it makes it more difficult for Kiva to work with you unless you're doing a program that is not specifically a loss leader for you. That might sound really strange, but Kiva is fundamentally a nonprofit, and we therefore need to make sure that we're doing things that are justifying a subsidy. And consequently, extreme profitability can be a concern. But the main caveat here is simply, if you are a company that just has a blueprint, or you only have a PowerPoint presentation, then you're probably not ready for Kiva. But once you're having sales, and then you're like, oh, if I only had more capital to increase my inventory, I could increase my sales, then it's probably a good time to reach out. The tenor of our loans are under 18 months. We always focus on short-term working capital loans, and the size is up to $50,000. Now, the repayment can be structured in accordance with the underlying cash flows. So if you're doing ag stuff, we can wait for a season of the underlying seed to grow. So as long we can do grace periods up to 6 months, and we are very, very flexible with repayments. The program is extremely new. We started 4 or 5 months ago. This data is actually already a bit old, thankfully. We have nearly raised $500,000. It's still very little, but hopefully this growth can continue. And in terms of returns, Kiva does lend at 0%. And that's a very attractive characteristic, but on the other side, we have to see an extremely clear social impact. If you don't have that, then the challenge will be that when you post your loan onto the Kiva website and we're not able to clearly transmit how the social impact is being generated, you will not be able to raise funds from our borrowers. And so if you currently type Kiva kiva.org/lend and then sort by high to amount by high to low, you'll be able to see a few very large loans that are about to expire. So you have 30 days to raise your funds on Kiva that were unable to raise their targets of $50,000 to $40,000. And this is despite these interventions being quite innovative and impactful, but unfortunately the Kiva community did not find them impactful enough and decided to fund other types of loans. Next slide, please. So for the DSE program, one of the first things we look at is who are your referral organizations. The way the Kiva DSE program works is that we are trying to leverage the due diligence and the network and the impact investment community that already exist. So we look to third parties such as Village Capital or Ashoka or Bankable Frontier Associates or the Global Alliance for Clean Cookstoves or Santa Clara GSP Global Social Business Incubator to refer companies to the Kiva DSE platform. And as I mentioned, it's extremely important to have a clear social impact and obviously a very clear use and repayment plan for the loan. One of the harder things that entrepreneurs forget to do is measure their impact. They believe it's naturally embedded into their business, but it's better if you make sure that one of your key performance indicators is related to a social impact metric that both you and the investors would care about. And before I run out of time, we should probably go to the last slide and just briefly outline how the process works. And before the campaign goes live onto the website, we do the due diligence process, and that can take from 1 week to a month, depending on how many applications we're receiving at a time. And that is where simply we just underwrite you, and everything is basically online. On this presentation, you have a one-pager link and FAQ links that will allow you to quickly review what is Kiva looking for. And once you have been approved by Kiva and we have checked your references, then we move you on to the campaign, which is 30 days on our website. There is 1.6 million lenders who actively go to the website and make loans. So as long as you are attractive to them, unlike say Kickstarter or Indiegogo, where 90% of the loans of the campaigns that are created do not reach their funds, on Kiva it's the opposite. Approximately only 10% do not reach their target. And so here we're putting you in an environment where without activating your social networks, you can actually benefit significantly by having social impact. And at what cost is that these anonymous players then hope to hear from you in regards to how the business is performing. And we look forward to getting updates from you on a monthly basis on how that business is performing. And I think we'll open this up to Q&A now, but perhaps Lendahand can present and then we can follow up.
Yeah, thanks, Carlos. I think we've already got some questions coming in for you already, but we will pick them up at the end. So we'll hear back from Carlos again. Please do keep your questions coming in. You can submit them via the chat box, and we'll take them during the Q&A segment. But I'd like to switch now and bring in Koen from Lendahand. Hi, Koen.
Yes, thank you, Bade. Hello, everybody. So my name is Koen Thé. I'm the CFO and also the CEO at Lendahand. Like Carlos, actually, I'm an ex-banker. I used to work for banks as Barclays, Capital, and Goldman Sachs. And now I'm heading the investment team at Lendahand. I've joined Lendahand about 2 years ago, and that was, I guess, the best decision of my life. Really happy to be here and to try and help basically guys like you who are actually out there in the field doing the good stuff. So about Lendahand, you can pretty much compare us with Kiva, although there are some fundamental differences between the two. But in the end, we try to do the same thing, maybe from a different angle. So we are also an online lending platform where we have a bit more focus on the investors. So we are a little bit closer to the capital markets. We are also not an NGO. We are a for-profit company, but we are a social enterprise. So as a social enterprise, our first goal is to create social impact, but we also want to do it in a sustainable way, such that we actually also create value, economic value, by doing what we do in order to attract shareholders, so that we can, in the end, become self-sustainable. But more than that, we want to alleviate poverty. And poverty we measure basically in different ways. So we first started by saying, well, if you want to help people to alleviate poverty, they need a job. So that was our first focus, really on small and on the lower end of the SMEs, basically, the small and medium enterprises, and try to get them funding through a network of local partners, much as Kiva actually. But those were loans of, say, 5,000 euros up to 50,000 euros in local currency, obviously. That was the funding need for those small and medium enterprises. And that we hit it off well. So we started going public for the we started going live for the public in mid 2014, and since then we've been growing quite rapidly. So we started in the Philippines with a local partner, and then we expanded into Colombia and also into a few countries in Africa and other Asian countries. So like Kiva, we also have a global focus. If you look at the sectors, we're not focusing on a specific sector as long as the company is able to use the funds efficiently and then create jobs. So now that we've put this platform in place, we realized that helping people to get a job by financing SMEs is one thing, but if what we see is that you can say that it's it's expensive to be poor, meaning that if you don't have access to healthcare or access to energy, etc., even though you have a job, it's still, you have to gather wood for your cooking, etc. It's still expensive to be poor. So we also wanted to work on that, and that's why we decided to focus also, for example, on financing the companies that are working on giving access to energy for people that are off-grid. And we started doing that in Kenya, but also in the Philippines, where we financed a microgrid. In Kenya, we financed a company that's doing solar home systems, and we see that that also works on our platform. So, although we don't have sectors in specific that we focus on, as we are expanding and broadening the scope of our mission, we see us involved with a lot of the renewable energy companies, and we want to add drinking water to that as well, education and healthcare. So if you look at how we are structured and how the products are structured, as I said, we are a little bit closer to the capital markets, so companies do pay an interest rate to us, and this also means that we are looking at companies that do have that are either profitable or have a very solid plan to become profitable in the near future. So these are typical companies that are in existence for at least 2 or 3 years, really ready to scale up. They are looking for working capital and are in need of debt financing of between 6 to 48 months. That's exactly those are exactly the companies that we want to help. Like Kiva, they don't have to be profitable. And actually, I concur what Carlos said. If you are at one point too profitable, then we might not be the right choice for you. But we are looking for the companies that can scale up using our funding. If you look at typical campaign size, I think we're a little bit on the higher end of that versus Kiva. It's anywhere between 50 and 250,000 per campaign. But also, what is important is for us, with the way we are set up, for each company that raises funds on our website, we do expect that that company has a funding need only for our platform of at least 1 million, and preferably higher than that. So we are looking for the companies that are having those kind of funding needs. And as an example, the microgrid developer in the Philippines, they are doing projects of a few million, and that's why they have also the funding need of a few million. If you look at the interest rates, the way what we always try to do is to get a fee. So once you've been through our due diligence process and we see this is a valuable business and it's creating impact and we can sustain you in that, we basically sit more or less on your average cost of funding. So if you are able to attract that funding at 7%, we're probably going to be exactly there at 7%. But then we also agree that as we see the volumes coming on our platform, hopefully by you, and we are gaining, we are having economies of scale, we are actually going to pay those economies of scale to all our stakeholders. So we are not here to maximize the shareholder value, we are here to maximize everybody's happiness, basically, and that means you as a borrower. It means the crowd lenders, but it also means our shareholders. So if we are able to charge a lower interest rate to you, we will. And so far we have succeeded in that. If we look at the investees or the companies that have come to our platform first 2 years ago, we've been able to lower the interest rate to them as we are growing. So that's definitely our mission to do so. So far we have 1,300 successful campaigns all over the place, across the board, in all kinds of sectors. Each and every campaign that has been on our website has got fully funded and has also been repaying for 100%. And let me see. What I wanted to say is, so it takes about so the average campaign size at the moment is 10,000 euros, but as I said, we can go up to 250,000. And for an average campaign to get fully funded, it takes around 4 days at the moment for us. Even if it's a larger campaign, we've done a 100,000 euro campaign about 2 or 3 weeks ago, and that one was funded within 4 days. We got a 50,000 euro campaign funded in I think 45 minutes or so. So the size, there's no real correlation between size and funding time. So if you go to the next slide. So what are we looking for? So as I said, it should be a company with a track record that is not necessarily profitable, but really is on a growth trajectory where it looks like that the firm will become profitable in the near future. That's exactly where we want to be, and that's exactly where we think our funding can help, because it's our crowd, it's patient money. It's it's not going away soon. if you go back to the platform again, they will reinvest with a high reinvestment rate. So it's for those kind of companies, and what we see is those kind of companies, they have an ambitious and skilled management team, usually have gained quite some working experience somewhere else, maybe at a commercial company, and is now also working for more like a social enterprise. They really value the impact that they create. They should be driven by that impact and not by the the size of their shares increasing in price or too much profits basically, but really focused and driven by the impact that they can create in the region that they are active in. Also, we look at the projections. They should both be ambitious but also realistic. And we've seen where projections were just not ambitious enough, and then unfortunately with the way we are set up, we are not able to help as we have a thorough due diligence procedure. So it doesn't help us, and if it's not a project that's able to scale. But we've also seen where the projections were just off the charts and a little bit too ambitious to our liking, and then you might want to look more for VC capital, I guess. What we've also seen is that not most, but quite a few of the companies that we have funded so far, they have failed in the past. Failure is actually a good learning point. As long as it doesn't kill you, it makes you stronger. I guess it's a cliche but true. And we've seen companies that failed miserably even, but survived it and came out stronger. And for us, it's more of a positive sign than a negative sign. Of course, if you if you started on a perfect scale and it only went up and up and up for you, we're happy to onboard you as well. But if you if you're transparent and tell us about what you've learned by doing by what you did wrong, that is definitely something that does not hinder funding on our platform. Also, what we see is that it helps if you're working so hard on your business and on your product, and you exactly know how you can improve it. And sometimes we see that companies get lost, and in the greater scheme of things, it's really important to go out there to connect with other like-minded companies, to basically attend seminars and really get a feeling of what is going on, and so get a better feeling also of what clients are looking for. That really helps. One thing that's actually not in here, but what also really helps is to make sure that your business plan makes sense. We all know that a business plan is something that, one thing is for sure, it will not go as planned, basically, whatever you are doing. So a business plan is not something that we are looking at like, okay, what will happen in the next few years? It's more like, did this company really think about the risks, about the opportunities, and is it a consistent story that they have and how they are going to solve a certain problem? That also means that you have to have your projections in order, your financials. You have to have realistic costs put in your model. That's all kind of if as you are doing that exercise, you get a much better feeling of what your strengths are and where you can actually be and make a difference. And as said, the team is basically everything. It's you can better have a good team with a mediocre product than the other way around, because a good team will make it work. And then if you go to the process, so here it's different, I guess, than with Kiva. For us, a typical due diligence process takes a few months, and I think it's sooner. It's actually more to the you can say that it's 3 months rather than 1 month, basically, because we have a thorough due diligence process because of the volumes that we want to do with one investee, basically, per year. So we start with usually we get into contact through connections, and we start having discussions over Skype. We do some desk research, and then if both parties are interested, I think this can be a good opportunity to work together. We sign an NDA and we get access to the data room. So then the investment team at Lendahand will then do a quick assessment of the data room and see if indeed this is an interesting opportunity for us and for our crowd. And what we then do is we have some follow-up questions with regards to the data room, and then we have a discussion with our credit committee. That's usually over the phone, and we explain what the opportunity that we see, and if the credit committee thinks it's something that we should pursue, then we start into the term sheet negotiations, and we try to get agreement on the key terms. And once that is in place, we ask for formal credit committee approval, and then if we can either start with a pilot. The pilot usually is for 500K, but if it's not a pilot, but we immediately start with a larger facility, then we also do a local due diligence, and we go over and visit you for a few days, talk to your clients, talk to your suppliers, talk to your shareholders, to the management team, of course, and then we sign the contracts. And this is really also in terms of your resources, we kind of are demanding at that point, I guess. This will take some of your resources and time, but once the facility is in place, so the facility basically means we can, for example, if the facility is 2.5 million, you can come to our platform with a project like, okay, I need more working capital because I want to do this in this region, and I need 50K for that. Then the project will come live on our platform. It gets funded, and then you get the funds basically, and then you can basically do that up to an amount of 2.5 million. So those campaigns. We don't, and this is like Kiva, we don't expect you to do a lot of efforts here. Leave that up to us. We are basically your marketing machine in Europe. We are at the moment only attracting money from the Netherlands, well, until recently, but we just opened it up for other countries in Europe because we received we now have a license as an investment firm from the Dutch financial regulator, and this is a European license. So we will launch also in the UK, in Germany, Sweden, and some other countries in the next 2 years, and also do so we can actively do marketing for securities in those countries as well. So you can regard us as your marketing machine in those countries. Of course, we will fine-tune the message together with you, but it's our team that will take care of this. In terms of the monitoring then, we do ask for quarterly KPIs that you submit to us. This is around, say, 10 financial metrics on your capitalization, on your liquidity, etc. Usually you can get those out of your management reporting, so it's usually something that our local partners can provide us in a few hours or so. It's not much work. And also on an annual basis, we do ask for your audited numbers and also on your social performance indicators. And those indicators, which ones those are, we agree with you, which makes the most sense, because for each company that can be different, and we want to make sure indeed that together with you we really think about what is the social impact that you want to create, because what Carlos said, sometimes it's something that's, well, it's on the more on the back of the minds of entrepreneurs rather than top of mind, but it's really important to understand what your impact is, and especially that's also important for our crowdlenders who are getting a financial return, but more than that are doing this also for the social return. And I guess that's it from my side at this point in time.
Thanks very much, Koen. I really appreciate that. I think it was very comprehensive, and whilst it also highlighted some similarities with Kiva, also kind of also pulled out a few distinctions, particularly around your approach to due diligence, for example. So that's great, and it leads us quite nicely into a Q&A segment, and I'll welcome back Carlos as well to take some of these questions that we have. And thanks to everyone who submitted questions. We've got a good number that was submitted. You can still continue to submit those questions because we've got good time to take them. The first question that I'd like to pose, it's one that we like to raise in this series, particularly looking at mobile. And I'll direct it both to Koen and also to Carlos, which is, I mean, we want to understand sort of what is the impact does mobile technology have, whether it's mobile money, machine-to-machine connectivity, or any other kind of variation of mobile technology that you've seen. What impact does that have on the success of a campaign? Can you kind of tell us any benefits that it has or any kind of risks that you see? And maybe, Carlos, we could start with you, and then we'll come to you, Carl.
Personally, I love mobile interventions. I get super excited when I see a pay-as-you-go solar intervention or a microfinance institution that's implementing mobile payments rather than depending on its credit officers. And I mean, the quality of the data, the accuracy of the payments is much higher than what you can expect in other systems. What can you say about manual ones? And mobile is extremely exciting of how it will completely revolutionize the way microfinance is done and the direct credit officer interface with the borrower, when most of that job description currently is just collecting the repayments. And one of the main expenses is collecting repayments, and how the credit officer can become ideally more of a business advisor rather than a collection mechanism, which can be substituted by technology. That gets me very excited. My surprise, however, is that it has not yet happened. I'm really dumbfounded by why mobile payment has not completely dominated every payment mechanism in every country, and Kenya still remains the one exception. And that's my main frustration in a macro level. And the specifics, I'm super excited when I see one, and I do everything I can to get them onto our platform. And I think lenders react very supportive of them.
Thanks, Carlos. Koen, would you like to add to that?
You know, I can echo what Carlos said. Actually, we're very excited about the technology going forward. Indeed, we are also a little bit surprised that it hasn't found the traction that it should have, I guess. But we see with the pay-as-you-go systems that, as we are talking to various firms, that indeed it has positive impact on the repayment rate. The sheer fact, basically, the idea that it can be, that you can be shut off the system, although it may sound hard, but it's only to give people the idea that how serious it is that you should pay back a loan. It's really helpful, and of course there are exceptions, and we have to be careful that we are not going to rely too much on that kind of technology, and always have to make sure that in the lending business especially, it's always about personal circumstances, etc. So indeed, there should always be some kind of a loan officer involved. There should always be personal contact, but much of the work can indeed be substituted by technology, by mobile technology. Also with regards to the repayments, the collections, mobile money is going to be such an important factor in our business, and that maybe even in a later stage that goes into the distributed ledgers. We see a lot of opportunities, and we're also a little bit exploring that when it comes to the blockchain and smart contracts, etc. So yeah, we are really on page one, I guess, of what is possible using mobile technology, and I'm actually certain that in say 5 to 10 years time, people here in the Netherlands or elsewhere in Europe and in the US will look at countries in Africa or in Asia to see how we can actually improve our systems, because in those continents they are basically leapfrogging the technology that we are using here.
Wow, I might have to quote you on that one. It's recorded, so we'll see.
Please go on.
Thanks. I mean, just maybe to stay with you here, Koen, and stay on the theme of mobile. I'm going to read a quote here, which was quoted from Africa Start in an article recently, where they said, by leveraging mobile technology, crowdfunding platforms have used innovative ways to create and promote the crowdfunding projects via SMS. And I guess I want to just check here. I mean, do you suggest mobile for promotions? Do you use it quite heavily with the campaigns in your marketing?
Yeah, that's SMS. I would. So if so, I have to talk from where I sit here in the Netherlands, where most people have smartphones, and what we see is that the adaptation, the mobile adaptation from our crowd, it gets in terms of actually lending money, so doing transactions over mobile phone is increasing. So we are also going into a redesign where we'll do a mobile first redesign. And what we see also is that I mean, the connectivity, you know, that we see nowadays is so much potential. If we look at, you know, if you go back to the .com period of say early 2000s, you know, where people were all talking about the internet. At that point in time, only 100 million people were online, and now it's 2 billion. To give you an idea of the connectivity at the moment. And what we see is that that also gives a lot of opportunities, where it used to be that, for example, for Lendahand as a startup, if we would have started early 2000s, we would have to do our own, you know, we have to think about our own marketing channels, about advertising, how are we going to do that. And nowadays you have Google, you have Facebook, you have Twitter, you have all these kind of channels and platforms where you can easily do your marketing at such a low cost that indeed it makes so much sense to make use of that technology. And what you see that is happening is that you know, it's all on the mobile. Basically, people will be found through the mobile and will do the transactions over the mobile. Specifically SMS, I guess then you are referring to basically to countries where smartphone penetration is not that high, I guess. It's something that we are not working on at the moment, but as a company, we do have the dream that one day Lendahand will not be a platform where people in the Netherlands or France or Germany are providing funding to companies in emerging markets, but it will much more be like, you can either call it local for local or global for global. So basically, a Kenyan person should be able to fund cool Kenyan projects, period. And also, a Kenyan person can also maybe fund cool projects in the Netherlands, so why not turn it around? So yeah, we hope to be there one day, but at this point in time, that's definitely, unfortunately, not the case.
No, thanks for that. And I'd like to bring Carlos in, maybe from a perspective from Kiva's point of view.
Okay, sorry, same with Mike. From Kiva's perspective, mobile technology is most relevant for our lender side rather than our borrower side. We have still not achieved the level of penetration that we would like on the borrower side to be able to interface directly with them. So, and this goes back to if there were efficient mobile payment mechanisms that Kiva could piggyback on, we would be doing something like we are doing with the United States, which is lending directly to the borrowers without a microfinance intermediary. And that is possible because in the US we're using PayPal. And that the business model that is created off that type of platform is very different from the traditional microfinance one. So am I optimistic and looking forward to the technology there? Yes. But as it currently stands, we primarily use it on the lender side, as most of our lenders are people who have smartphones and who obviously are using Twitter. Not obviously, but are more likely to use Twitter, and Kiva is very active on those channels, and we encourage not necessarily borrowers, but the social enterprises that are acting as field partners, or the social enterprises that are going to become borrowers under the DFD platform, to use social media to attract more lenders to their particular loan.
Yeah, thanks for that, Carlos. I think it's quite clear from both those responses. There's still quite some work to be done there, but very interesting to get both of your thoughts. I'd like to stay with you, Carlos, for this next question. You mentioned at the top of your presentation around the markets that you are in and the markets that you are not in. And so there's a question around, will you be looking at India in the future, and will you provide, or do you provide equity?
So for India, we have been looking at it, and we are constantly looking at it, and it boils down that the regulatory, the RBI, the Central Bank of India is not very welcoming of dollar-denominated debt. That's really what it boils down to, and as long as that position stands, it's nearly impossible for Kiva or any other debt funder to provide investments in India. So I seriously say it's not us, it's them. They are much more open to equity. Unfortunately, Kiva, on the other hand, is not open to equity. Kiva does debt, and we currently do not do equity. And I mean, even with the Jobs Act, I have still not yet been able to convince people at Kiva to do such a significant change on the platform. So equity is still far out.
Okay, thanks for that answer, and thanks for the person who raised that question. A similar, slightly different question, but targeted back to Koen. Can you talk to us about the debt terms that you have there, and explain whether you kind of provide secure or unsecured debt?
Yeah, sure. That's so we have done both in terms of secured and unsecured, and we basically, this really depends on the conversation that we have and what makes sense. Because if it's secured, then we can lower the interest rate. Sometimes the security doesn't really make sense. I can give you an example. Soon we'll have a company on board that's doing biogas. So you have this fairly large tanks that are put under the ground, basically, for households. Those kind of collateral is something that we have to value at zero, basically, because it's something that we cannot claim. So in that case, we would go for unsecured. But if it's some, to give another example, we're also working with a company in supply chain finance, and their collateral are invoices. So using those invoices and assigning it to our crowd, we were actually able to lower the interest rate. So it really depends on what we can, what the value we can put on that collateral. So if you look at other terms, so we usually like to be senior. We haven't done yet a mezzanine structure, and definitely not equity. Like Kiva, we are not, for the near future, we're probably not going and enter that space. We focus on that. We prefer as senior as possible. We also have a pari passu clause in place, meaning that if any other future debt funders come on board, we want to basically be sitting on at the same table as they are, basically. Having said that, we are really, for us, it's really important that the company is able to grow. And for instance, if a bank steps in and they like to be more senior, or they have more wishes in terms of securities, we are definitely open to that. So although we do have some strict covenants and clauses in place, we always try to remain flexible and see where we can actually, if it really helps the company and it helps the social impact that they try to create, we are definitely there to facilitate. So yeah, if we get the confidence that we look at, that's in terms of liquidity, but also future profitability, and also solvency. So, for example, we like to have a leverage ratio not higher than 4, sometimes 5. But yeah, for us it's important that they have shareholders that are able to replenish the equity levels if needed. So yeah, we're looking for those kind of companies, I guess.
Yeah, thank you. Thanks for that. I want to kind of get through because we've got some nice questions coming in from the audience. Another one that's been directed at you, Carlos. So the question, I'll just read it as it's stated here. It says, what are some of the covenants in your contracts in case a business delays repayment or defaults? Is the risk purely taken by the lender?
Yes. Yes. And I mean, if I just left it at that, you'd be like, wow, you guys are really insane. And what needs to be clarified is, unlike traditional businesses, social entrepreneurs will live and die because of reputation. And if you're a serious social entrepreneur, you don't want to tar your reputation. And that's why we're working on a referral process. Like, if you can't pay back Kiva, there's no way you're going to be able to work with Village Capital Fund, and there's no way you're going to able to work with Acumen. And so we are placing a big bunch of trust on an entrepreneur's trust. I know that sounds almost like irresponsible from a traditional financial space, but when you boil down a contract, it really is the lack of trust that requires the legal clauses that are in place. And trust can lower those costs. Now, that doesn't mean that a good faith effort to make a repayment and failing because of, hey, a hurricane hits your social enterprise in Haiti and totally destroys your microgrid, that is still a real thing that happens. And that is something that both our lenders and Kiva are completely fine with. What's important is the good communication. I think it's the bad faith of like, yeah, I didn't want to pay you back, so I didn't. That's the thing that will not go down easily.
Thanks for that very, very clear answer to that question, and I hope that helps the person who answered that or raised that question. Still, we have good questions here that just picking through a good one. One for you, Koen. Question here says that since currency conversion is involved while taking as well as repaying a loan, does Lendahand provide support towards helping with local regulation?
Local regulation, or is it local currencies?
The question was whether there's local regulation, but I'd say try to maybe address it from what you do and what you don't do.
Sure. Yeah, sure. So if it comes down to currency, to foreign exchange rates risks, that's something that for our strategic plan 2017, it's high on the agenda. So what at the moment we are only able to lend in hard currency, so euros, US dollars, or sterling pounds. And what we see is that that basically means that as the entrepreneurs usually have an income stream in local currency, there's this mismatch, and they are basically taking the FX risks. And that's something that bothers us, because that's, the entrepreneurs should be doing what they're good at, and probably they're not good at thinking and managing foreign exchange rate risks. We really want to help the entrepreneurs by doing that. So we are now in talks with several hedging providers to see if there is some kind of comprehensive solution, or that we can work with, some kind of maybe a reserve fund, such that we are actually able to lend, well, maybe so we are still lending then in hard currencies, but we also provide a hedging mechanism that comes with it, such that for the entrepreneurs, they can regard it as a local currency loan. And when thinking of regulations, what you also see is that as you have to pay interest rates on our debt, in some countries it also means there's some kind of a withholding tax, meaning that you have also and also when it comes to signing the contracts, and especially when it comes to execution of the deed of assignment, if it is a secured contract, then we do that together with the company, and we also talk to local lawyers and really help where possible, because again, for the entrepreneurs, this is not their core business, right? Getting to an agreement on a debt contract, and for us, it is our core business, and we want to make sure that we have a contract. We, as Lendahand, are nothing more than a broker, basically, between the crowd and the entrepreneurs. As a party, we are not involved basically in a transaction, other than we bring the two parties together. And for us, we are right in the middle. We think on behalf of the crowd in terms of securities, etc., and repayments. But we also think on behalf of the entrepreneurs, to make sure they get a good deal out of this, and that they have, that this is funding that fits what they need. And will not drag them down or whatever. So yeah, we try to be as facilitating as we can.
Thank you very much, Koen. I think we will probably. I'm tempted to try and squeeze in one more question, but it's a fairly loaded question, so I may have to just pause it there and say, well, big thank you actually, really and truly, because we covered quite a number of questions there, but that's all the time that we have today, just to kind of stick to time. I particularly want to say that for the questions that we weren't able to address on the call, we'll have to see how we address them retrospectively, maybe pick up some of them and follow up directly with the people who raised the questions. If there were any inquiries about our innovation fund, which I showed on the screen earlier, you can direct your questions to us via the second email that shows there on the screen. The first email address there, you can direct any questions around the webinar to. We don't have an open call for our innovation fund at the moment, but we will have one opening in early 2017. On behalf of the M4D Utilities team, we do hope that you found this webinar very insightful. The whole series, in fact, has been something that we've been very excited to put together. I think with today's session, it's been a very good end to the series. We're very keen to hear from all of our attendees. Any feedback that you have, please do write to us. The recording of today's webinar will be available on our website in the coming days, and then you can find other useful resources there. After this webinar, in the follow-up email, there will be a survey in the link that we'd really appreciate your responses to. While this concludes the Investor Roundtable series, we will be publishing a summary of the key insights early next year, taking the points from this webinar and the other webinars as well, and really rounding things up. And it kind of goes without saying a huge thanks to our speakers today, to Carlos, who dialed in very early, and we have to really appreciate you for being on the call, and also for Koen, who stood in for Tobias, who unfortunately fell ill for today's webinar, but no one would have noticed, because the dynamic duo, as I was introduced to them as, certainly showed their dynamism in today's webinar. And lastly, to thank all of our attendees for taking the time to join us today. We do again hope that you found it useful, and please do look out for the summary that will come early next year. And at that, I'd like to thank everyone and say enjoy the rest of your day. Thank you all.